Let's go.
You're listening to Making Data Simple, where we make the world of data effortless, relevant, and yes, even fun.
Hey folks, welcome to Making Data Simple. Again, you're back. Thank you for that. We are right before Memorial Day. This won't be posted until well after Memorial Day, but we're getting ready for a 3-day here in the US. I've had several IBMers on the last couple podcasts, but typically it's around 70% industry, and I'm back to the industry with this one. Again, I have another great guest, and that's Kathy Stairs. She's an executive vice president of North America for Provenir, a global leader in AI-powered risk decision software. They process more than 4 billion transactions annually for disruptive financial services in more than 50 countries worldwide. What I know about Kathy, she has more than 20 years experience and accomplishments in the financial services technology. She brings deep knowledge and curiosity around risk decision innovation. Welcome to the show. I appreciate it. We're going to have some fun today. I got a lot to learn. Welcome. Thank you for being here.
Thank you. It's a pleasure to be here. And I think you did do it justice. So I've grown up in the financial services industry, starting out in the banking side myself, and then moving over to the risk decisioning technology side with having, as you said, more than 20 years experience in the space. So I've learned a few things along the way, and I'm happy to share any insights with you today. So
give us a little bit of your background first. I mean, how did you end up in the financial or the risk decision space?
So really, right out of school, I got into the banking space, and literally starting off as a teller. So being on the financial services side and starting there, and worked through banking for some years, and got into really a curious understanding of how decisions are made in financial services, why are decisions made the way they are, and how does it impact consumer. And I'm very customer first focused. I think my passion in this space is understanding how it impacts the end user. And even though I'm in a B2B space in financial decisioning, rather, it always ends up in how does this impact the customer's customer, so the end consumer. And I've always been curious about that. And so I moved into the decisioning technology space, looking at how this can impact the industry in itself. And I really am entrepreneurial in thinking, so really wanted to learn on how we disrupt the way that it is being done historically, and continue to innovate and change the way that we're interacting with customers, especially as major things happen, economic issues, financial crisis. How does that impact the end user, and what can we do to support them?
When you say you've been in the banking space for some time, you've been in the banking. I mean, you started off with a teller, and then you made the leap into the technology. Are you a technologist, or are you more on the financial side? I mean, what's your brand?
So I'm not a technologist. I'm more on the financial business side. And, I know enough technology to be dangerous in a conversation, because I've been in the space long enough to understand how the platforms work and how they integrate in financial services. But yeah, definitely on the business side, and really on driving innovation through customer experience.
So where are you located, by the way, if I may ask?
I actually live in Toronto, in Canada.
In Toronto, but you are working across businesses in, like I said to start, something like 50 different countries?
Yeah, Provenir is global and works in and has customers across 50 countries. I have my focus, as you said in the beginning, is North America. So I work a lot in the US and have for many, many years, but am located in Toronto.
So before I go into my deep question, you're not celebrating Memorial Day then?
No.
You had that last week, right?
We had it last week. We had Victoria Day last week, yes.
Since you got North America, I got to believe you've got an easier day on Monday.
It will be lighter. I'll be able to get through my emails, be able to get through a few things, because, yes, a good portion of my business is in the U.S. So I often align to U.S. holidays and end up working some of the Canadian holidays, but I try to do a balance of both. And that's just the reality of operating in North American business. I did take Victoria Day, and I often do, because it's the kickoff of summer, right? It's the first long weekend. Yes. It's the end of May. The weather's good. So I have a cottage or a lake house that the family goes to. So I did take Victoria Day Monday will be a lighter day. I will be working, and still the Canadian business to run is they're not off, but it will be lighter. So a lot of time to catch up on things for sure.
Is there anybody in Canada that doesn't have a cottage? Just like you got so many lakes, everybody that I talk to goes to the quote unquote the cottage in the summers. I presume you're boating. Is that what you fish or you boat? You probably boat. Yeah.
So we boat, and I have 2 kids. I have a 17-year-old, almost 18, and I have a 14-year-old, both boys. So there's a lot of boating, sea-doing, ATV riding, kayaking, there's a lot to do at the cottage. And you're right. It's almost part of our identity in Canada, the amount of people that have lake houses and spend the summer driving. So it's a traffic gridlock on Friday evenings and, Sunday evenings coming back, and long weekends being worse for traffic for sure.
So one more question on this. Well, at least one more. I'm heading down the lake. I have a boat. It's a surf boat, so I plan to get in the water. But my dilemma right now is the water is going to be pretty chilly. Yeah, I mean, and this is in southern Missouri. So It will be probably about 78 degrees, which isn't bad, but I'm still going to probably take a wetsuit. What would be the water temperature right? See, I knew you were going to say that. So what's the temperature
of my lake?
It's all relative.
Yes. I have a tradition with my boys that started, and I don't know why I started this, but 10 years ago, 12 years ago, when we got the cottage, that on Mother's Day, we usually open either on Mother's Day weekend or slightly before we open the cottage for the season. And I always go in the lake then, and it can literally be days after the ice has sunk. So it is like a polar bear jump. But last weekend I went in.
Are you kidding me?
And yes, last weekend I went in and it was 58 degrees, and I did a jump in. I don't hang out in there. I don't hang on, but I definitely do try to get into the water. So it's a quick in and out, but that's what the temperature was last weekend. So we've had a warm week. Right. It probably has warmed up a degree or two.
So I can make fun of all my friends here. Then, what temperature do you say? Hey, it's good to hang out in the lake in. What would be your temperature?
Probably between 70, 75. I'll do a swim and hang out in the lake.
All right. So right now, if I'm at 77, you're all in. I mean, it's I'm in. Come on, guys.
Yeah. I'm totally in.
All right, good. We're debating about whether we're getting in at 77. Can you believe that? So, all right, you set me up for this weekend. Thank you for that. I appreciate it. Well, say, look, I just talked to somebody from Canada. They say we're crazy.
Exactly. Get in the lake.
All right, good. All right, so let's jump in. You got to start at square one for me here. AI-powered risk decisioning software. What are we talking about here?
So it's really, it's all encompassing of how we do risk management today. So in a financial organization at the highest level, everything that you do, every touch point you have with them, a decision is made, right? And there needs to be a strong technology platform underneath that drives how that decision is made. And so what we really do is provide a platform that enables organizations to process all of their decisioning right from the very beginning of a customer onboarding, we call them, a customer applying for a financial instrument, all the way through to, if they happen to be unfortunately into a collections environment. There are hundreds of decisions that are made across that. And the platform uses AI natively to help analyze the large data sets from customer structured, unstructured, and alternative data to inject it into those decision flows in an automated fashion. So take a customer that comes, applies for a loan, gets approved. They go through a fraud, approval process, usually identity check. Are they who they say they are to satisfy KYC, AML, which are regulations, know your customer, anti-money laundering. They then day 2 become a customer, and they interact with you in many ways when they're a customer. And you can then provide personalized offers back to them, whether it's cross-selling a credit card, whether it's looking at, their credit lines. Do you increase them? Do you decrease them? Based on what predictive modeling and analytical modeling, where the AI ML comes into inside of a customer's journey, and how you essentially manage that customer from a bank perspective or fintech perspective. So we power all of that and have the technology embedded in our platform to be able to provide banks with the ability to make all those decisions and manage their customer base.
You're selling to all banks, any size banks?
Yes. Worldwide, any bank and size of bank, fintechs worldwide. Yes.
Is it a platform you're selling? Is it just like one product you're selling? How does it work?
Yeah, it's a platform. It's an end-to-end platform that's cloud-based, that you can use it for different aspects of the credit risk life cycle, is what we call it. The customer journey is what I like to refer to it as. And it has the technology underlying to be able to do right from, as I said, right from onboarding a customer through to collections. And we package up solutions to enable customers to meet when I say customers throughout this, I'm referring to banks, meet their needs that they need to serve to their consumers. So onboarding, account management or customer management, how you interact with your customer through their own journey, and through to collections. And, we provide a fraud solution that goes with that. So we have an underlying platform, but it's really solution-based and how to meet the needs of the customers. It's one platform. It's not integrating 5 different platforms to meet your customer journey. So yes, the underlying, and that's why we're a technology company, but we also are a solution data-driven company as well.
When we're talking about technology, I mean, there's a difference, and I know that you're on the business side. That's perfectly fine, all good. But the question, I guess, is, what technology are you using? There's different forms of AI, by example. It could be machine learning. You could be using like foundational models around language.
Yep.
Where is the technology? What technology are we talking about?
So it's a cloud-based platform, and we have built into the platform AI, and it's really ML capability. When we're talking about AI, it's machine learning capability that's inside the platform. We don't generate ML generates model. We don't build models. That is all our customers that do all of that, and they import the models into our technology. So I don't know how else to describe it, as it's an end-to-end platform, and it's integrated into the banks so that they can send all of the data through in order to make decisions. And we have native to that ML capability so that you can look at your models and auto-generate models in seconds to identify to a customer if there's any change in the model that they need to make, then a change in how they interact with their customers. So, in the industry, it's called, is it drifting? Is it capturing the right population? Is there a change economically or macroeconomically, or even from a regulatory perspective, that needs to be considered inside the model? All of these are variables that go into machine learning to generate additional models. And then it informs and identifies back to the customer that you might want to use a different model. We have the ability inside of that to do what's champion challenger as well. So banks can actually run 2 different strategies to identify which is the best strategy for their business purpose, and switch to that strategy. So all of these features are available in a platform. So it's a contained platform that is cloud-based SaaS, and it's integrated into the banking customer systems in order to get all the data to make the decisions.
Using ML, totally get that. Are they unique to a bank, or are they pretty generic, and then you use the data to make them unique?
Well, I think that modeling in general, and the different types of models, and behavioral models, credit risk models, fraud models, they're all designed by the customer. So the language that they, Python R, the language that they use to build them is pretty standard in the industry. Each organization, uses pretty standard cutoff rates, variables that go inside of models, and then they're integrated inside of our platform. So there's not a huge difference, I think, in how you structure some of the models, but each organization can have slightly different data in their model that, decisions a little bit differently.
What data? What's the data source in this? Is it the bank's own data? How does that work? What data
Okay,
is
so
it built off of?
yeah, so it's the best decisioning takes into account multiple forms of data, right? So the bank has a lot of data to understand what their customer is doing presently and how the customer is performing inside of their organization, and they also have, potentially alternate data sources. When the customer starts at originations, from example, we take the any data that's available from the bank. If the customer, has another credit card or something and they're applying for a loan. So we take that into consideration. But we also look for alternative data sources and inject that data in. We've got a marketplace of over 100 providers, and they may go to different data sources for fraud, as an example. And that gets pulled down and analyzed alongside. Are there alerts? Are there any anomalies? Data such as, cell phone and, is their IP address the same, IEMI, what are the changes happening there, if their phone number changed, all those sorts of variables are considered inside of their decision flow. Open banking data is also something that is very important in today's risk mitigation. All of that data is pulled down into their decisioning, and then think of it as decision trees, different arms of how the flow of the customer can go based on the data that they're using. And then a decision is made, or it goes to the next form, and that's where you might look at traditional credit models, behavioral models, if relevant, fraud models, and it goes through that process. And then at the end comes out with a decision. Yes, approve this. No, don't. Or, refer to a manual check, or, offer a lower line, or, whatever the customer wants to present to the consumer. Happens after that decisioning. So the best risk strategies, as I said, use any internal data plus external or alternate data.
I think you already answered that, but I want to be very specific, and I think you would want to be too. And that is the business problem that we're solving here. Is it mostly loans? I mean, is that like 80% of your business, or is it, 50-50 loan fraud checks?
We have banks across the board that use us for originations, application, use us for customer management, all of day two interactions, how you interact with your customer, and then use us in collections as well. So it's solving their business use case. We don't design the strategies. We process the strategies. So we work very closely with the bank to give them very proactive feedback on what we're seeing as industry best practices and help them optimize their decision strategies. And then we operationalize those strategies inside of the platform.
Look, I was an investor in a bank, but to say that I know what banks do is probably a stretch. So my question, I guess, is I would imagine that most of the strategies on loan approval, this is my naivety, I guess, would be consistent. But do you say each bank has its own strategy?
They're generally consistent. I mean, when you do an onboarding flow, as an example, you come in, as I said, you do fraud checks, you do credit risk checks, you use alternate data, as I mentioned, all in the beginning part of it, and then you make a decision. So generally the flows are the same, right? Each organization can have a slightly different decision point. They might have a different cutoff risk score. They might have a different fraud threshold. Are they lending to, prime lenders, subprime lenders? In the collections flow, as an example, they may choose a different way to treat a early, potential defaulter when the flags come up that you're in predicting default. They may use different strategies to interact with their customer, but the main buckets of how a bank interacts with people are generally the same. There's slight differences in their strategies based on what products they're offering.
Is this purely isolated on risk management, or does it have more features towards a greater CRM that includes risk management?
We're not a CRM. We often integrate into a bank CRM. So, but we can use different use cases inside of the platform. Marketing is an example, not just financial risk, but marketing for next best action, or, is another use case as an example. Different industries, but credit risk aligned, auto finance, telco, anyone in there that's making a decision, and we can do essentially branch out into their risk management, their fraud management, marketing, as I say, collections, as I've said in the past. There's sort of the same themes that go on. And there's like similarities inside of those institutions, but there's optimal ways to deploy strategies and to make decisions. 5 steps is an example. A bank can come and have 5 steps to calculate a score, and we can optimize inside and say you only need 1 step to actually calculate that score, or 2 steps to calculate that score. So that's the optimizing of strategies that happens, when a bank starts to look over how they're going to import strategies or recreate them inside of our software.
I don't know if you've ever seen the movie Along Came Polly, like when Ben Stiller is the risk management guy and he's like looking at a screen, and then there's this bar that goes, as they're assessing somebody, goes from left to right and it says, risky, do not lend, or whatever the case may be. I'm kind of envisioning that right now. How much is it automated versus not?
Fully automate decisioning, and we can automate 90 plus 98% of your decisioning can be fully automated with a few manual, and manual is a kick out based on data. Your Ben Stiller analogy, it comes up is very, very risky. You might want to know why, or they're right on the threshold of approval, denial. Do you want to go take a check at them? So what we're really doing is fully automating the decisioning process versus having human intervention. The goal is to have little to no human intervention. And that is because, if you think about it, consumers are driving the demand for instant adjudication, instant interaction with consumers. Gen Z and millennials are technology first and used to that. So in order to meet the demand of the consumers right now, you need to be fully automated. Having human intervention just causes delays and then can cause loss of customers or attrition of customers, higher default rates as an example. All of those can be results of having too much of a manual process.
So what is your differentiation? Why would Provenir be the platform of choice?
So there's a couple key points that are a differentiator. One is our data orchestration ability, the ability to orchestrate many different forms of data that can be injected inside of a customer strategy. Having the ML native to our platform, so being able to run ML with your decisioning and alternate data combined, so your own information you're getting from every decision that you make and any alternative data to inform the ML models in real time, so that real time changes can be made to a model or to a strategy. And the power of automation through our platform, and that we are one end-to-end platform that can create, do your steps as you referenced 1 to 10. So our differentiators are that, and our continual innovation to continually evolve our product.
Got it. Let's go back to the millennial and Gen Z reference you made, because I did see on your website some specifics around millennial and Gen Z. And you were talking about helping to predict and prevent auto loan default. Is there a problem right now? I guess that's the first thing I say. And why? I mean, I'm presuming you're... Well, go ahead. Yeah, maybe there is a problem.
Yeah, I mean, actually, in Gen Z right now, auto loan group with respect to auto loans defaults has gone up to 4.8% from 4.3% last year, which is a significant number. And when you get into millennials, it increased from 3% to 3.6%. So what's happening right now is their economic pressure that's out there and rising car prices are contributing to it. And the reality is how the millennials and Gen Zs are managing their financial health right now. A lot of them are living paycheck to paycheck. So it makes them difficult to manage loan payments, especially when something comes up like a change in inflation, rising interest rates, cost of groceries going up, cost of gas as an example. Like there's a lot of costs that are rising that are outside of their span of control. And when you're living paycheck to paycheck, any impact there can create a situation where you may have the intent to pay, but not the ability to pay. And also their earnings increase at a lagging rate behind inflation. So it puts strain on their ability to meet financial obligations. So there definitely is an issue right now with the default rates among the millennials and Gen Zs. And so using AI, we're talking about using AI and ML to prevent loan default, because what you want to do is get ahead of the loan default and really inject empathy into the way you manage defaults today. You can use predictive analytics to analyze historical data that identifies patterns to predict borrowers are at higher risk of defaulting. You can, in that case, using credit scores, payment history, income levels, all are considered to look at what are patterns. So that's backward looking. But you also want to look to be able to predict. So what activities happen before a default? And, when you use predictive models, some statistics for you, the default prediction accuracy increases, say, 10 to 15% compared to just looking back and looking at credit history, because that assumes that the past is exactly the same as the present. But what also is really relevant to helping those that are getting into a default space in the auto loan, which is the line that we're talking about right now, is real-time monitoring. And that was part of that customer management I spoke about, but really looking at and continuously monitoring financial activities to provide early warning signs. So, changes in spending habits, cash flow, those sorts of things that are happening, might have an impact on loan defaults. And if you take preemptive actions, you can reduce those rates, and in some organizations up to 20%. And finally, the AI and data, which we're sort of talking about here, and which is a big thing when I talked about AI, or pardon me, how consumers want to be treated, specifically millennials and Gen Z, really respond to personalized interventions. So ML can help you decide what is the most effective way to reach out to Kathy, so that she either is prompted to make payments early, or we get a very tailored approach to Kathy if there's, a hardship program, a refinancing program, changing the way that the customer pays, putting them on automated payments, giving them incentives to pay. Will that change their behavior in terms of how they manage their auto loan? So this
isn't really even about the loan inception. I mean, it is, but it's all about ongoing monitoring
correct
of said loan to be able to make a call or a.
Yep. Do I text you? Do I call you? Do I email you? What time of the day should I do those activities based on, some of your own activities? Is it better to reach you in the morning? Is it better to reach you in the evening? All of those things can be put into place and be what we call treatment strategies in the collection space. And, you asked about differentiation, and in the collection space, it's very much an underserved, it's underserved from a technology perspective. A lot of focus goes on to the front end of, bringing customers on. And, we've really got to look at now how we use technology to handle those customers that get into financial hardship. And, our platform being one from beginning to end, as you said, step 1 to 10 that we can satisfy, can really help organizations achieve what we were just talking about, and how you can get to early default warnings and help then in an empathetic manner manage, these consumers through this hardship that is a win-win for both people. So they're not defaulting and it's not impacting them financially. There's credit bureau history implications. There's implications on defaulting into other areas when you can't, or when they start defaulting rather in auto loans, they may be then looking at credit card default. So bringing the financial health of the consumer should be top priority to any of the banks, in my opinion.
I have a few more questions, kind of bringing it back up. What are some of the near-term trends you see that we should be aware of and look out for?
So I think that, one of the things that we're going to be looking at from a, if we even stay in that cohort of the Gen Z millennial, is I think we need to look out for ensuring that we're investing in technology, right? So they're digital natives, and our banks need to be able to provide comfort extending financial transactions in a digital way, and continue to use shifts towards digital interactions and digital touch points. Traditional banks and financial institutions will likely increase their investment in fintech solutions, and looking at those solutions that can lead to more personalized, efficient, and accessible financial services for consumers. The other thing that's a big trend that I think is happening is the preference for sustainable and ethical investing. And we didn't talk about that, but for the Gen Z millennial, that's really important to them. The growing emphasis on environmental, social, and governance factors are really going to drive how and who this cohort interacts with. So making sure that their values align with the bank's values, align with things concerning sustainability, social justice, corporate governance as an example. So really looking at that, because that's going to drive some of the decision of this cohort and who they want to bank with. There's also going to be a greater focus on financial wellness and education. We talked a little bit about that on making sure this millennials and Gen Z, who are more often than not these days gig economists, and have different and alternate ways of earning income, to be able to help them manage their cash flow, provide tools for budgeting, financial education, helping them make informed decision in finances. I think there'll be a continued evolution of those tools and those interactions and touch points. And, finally, it's continuing to use alternative data, especially in the, as I mentioned, gig economy, which is a big part of income, again, in this cohort when they're freelancing, doing gig work. So enabling your technology and models to change in employment patterns, which is a different approach to financial planning. So you need much more flexible savings and investment products to be able to serve this cohort.
What do you wish everyone would know? Maybe they don't know today, maybe even is misinformation. What comes to mind when you just say, I wish everybody would just know this?
I think it's that risk management is a part of our personal lives as well. Risk management at its very core is just mitigating threats. And I think that we all need to look at risk management ourselves, not just outside of banks, and look at the concept of how we can employ it in our own everyday lives. And that starts with managing your cash flow. As I said, it's a big deal to understand via budgets how your cash is coming in and how you're spending it, and what's the threat to that cash flow. And it could be, losing your job, as I talked about, inflation, higher interest rates. So how do you mitigate those threats? And one of them is having your emergency fund, which is, equivalent to pre-delinquent, potentially in a decision flow, so that you've got a cushion there to manage or mitigate risk against your own cash flow problems, so that you're not at risk of defaulting and getting into a credit situation that you can't get out of, and really looking at financial wellness. So risk management inside of banks all does is to look at your financial wellness and help you manage that. But I think we need to look at it from a personal perspective, that we need risk management in our own lives, and to align that with how we interact with financial institutions.
Hey, where can listeners reach you, and where can they reach Provenir?
So they can reach Provenir at provenir.com. So that's our website that's out there. I'm available on LinkedIn or through a contact us, if you will, on the website. So I'm happy to take any questions or interact with anybody post podcast, and would welcome the opportunity. You can reach me at kstairs@provenir.com if you wanted to reach out to me directly.
Terrific. I have to tell you, I'm embarrassed that I mentioned a wetsuit now. It's a very thin wetsuit. And by the way, I'm surfing, so I'm above the water wet, just so you know, with a lot of wind. So they can get chilly.
I think there's just some more and more excuses coming up as to why you need to provide a wetsuit to go.
All right. There's no wetsuit going on this weekend. That's all right. I can do it. It's no problem. Hey, any books you can recommend? I mean, look, I do a lot of studying on investing, et cetera. So it really resonates with me on investing early. I don't think speaking of millennials and Gen Z, understand the power of compounding interest. You start early, that simple $1,000 is going to be worth a ton.
You know what? There's an oldie but a goodie that I think for those starting out in the business to look at it is quite simply the Wealthy Barber, which talks about paying yourself first, and how to pay yourself first and start to create a healthy financial portfolio. It's something I read a long time ago, and I think it's very good from a starting perspective.
Great. Thank you for being here. I greatly appreciate it, Kathy.
My pleasure.
Thank you. As always, listeners, hit us on almartintalksdata@gmail.com. We'd love to hear from you. Till next time, we'll see you on the podcast. See you then. Bye-bye.